Good morning, everyone. David Paul speaking. I'm looking at VectorVest USA on the morning of the 10th of July. VectorVest advocates caution when buying stocks at this time. The primary wave is still up, and all other measures of the US market are up. Yesterday we had a down day, an outside day, in fact, on the S&P 500. So if I have a look at the VectorVest market timing chart, which I think I've got open, yeah, there it is. We can see the composite, all of the shares that we follow in the US, and I've marked on the DEW market timing signals. The DEW is still up, and I'm still holding positions, and certainly most of the tech stocks had a really good day yesterday. The thing that was circulating was that if there is a second lockdown, that's going to be particularly good for internet stocks. Let's hope that second lockdown does not happen. We've got the buy-sell ratio falling, whereas the composite made a double top here. That's never good, folks, and it is although it's at 1.38 still, down below the 1 level, and that would print, in fact, a sell signal on the longest term market timing system, the confirmed call system. So steady as she goes, and I've got the portfolio that I'm holding, and they had a really good day yesterday. Fortinet had a good day, Lulu had a good day, and AMD is finally, with any luck, out of the woods. I've held on to this for a long time, and as you can see, it had a particularly good day yesterday, pushing up towards this resistance level that stopped at once, well, quite a few times already. I really like the look of this pattern, this cup and handle pattern. If it can break, then the target is huge up the page. TTD is still going, 463, still going, and gold off a bit yesterday. The GDX off a little bit, but some great performances here, and Lulu and Fortinet are worth a look. I think they are still running nicely. That's Fortinet has broken out of this pattern. This is a 1 to 5 waves broken up here. Any luck, this bit is going to be repeated, and that'd be a $40 move. So that's a very nice move in Fortinet. Fortinet has got a wonderful combination of both relative value, price appreciation potential, and relative safety, the safety and the predictability of earnings. This is just a textbook 5-wave continuation pattern, and one of my mentors, a guy called William Gann, always used to say that markets break on the 4th attempt, and that's the 4th attempt. 1, 2, 3, broke on the 4th attempt. I bought into the thing myself after this outside day, because I felt that this was a spring, and I've sweated into it, so that's been particularly good. And that's Lulu, another spring, and it's breaking up very strongly. I like the look of that outside day yesterday. So as you can see, an outside day that encompassed a range of 1, 2, 3, at least 3 days, so that looks pretty good as long as the general market can keep going. So I'm hanging in there, reasonably happy with those. Let's have a look at the UK. The UK, the primary wave is turned down, folks. VectorVest does not advocate buying stocks at this time. Very good advice. All the other measures of the market are still positive, and I'm holding positions. So if we have a look at the VectorVest composite of the UK, well, pretty much the same situation as the US, folks. This is pushed up, but the buy-sell ratio, in fact, couldn't go the same way. So price rose, buy-sell ratio falling. It's made a compound normal divergence. This is pushed up a couple of times. This is, in fact, couldn't keep up with it a couple of times. That's a bearish warning signal. This can hang in there for much longer than anybody would think, but nevertheless, it is a warning signal. The DEW signal came on the 7th of April. That's still in place. We have this warning signal from what Dr. Leaderwood VectorVest calls the canary, the buy-sell ratio, called canary because it's a tremendous leading indicator of change, and that's telling us in both countries that we need to be careful. We need to be watching and not taking too long fishing trips. So if I go to VectorVest on the shares that I'm holding. Avon Rubber seems to have blasted off. It got rid of the agricultural division during the week. That was well received and it's pushed up. Rest of the stocks flattish, no big moves down. And let's have a look at a few of these if I can. So that's Lion Trust moving up very nicely indeed. Let's take this off, make it a bit clearer. It's pushing strongly up and would seem to have broken up. Many of us got a little concerned a few weeks ago when it pulled back, and really it was just pulling back to the support level. So and it'll do the same again, folks, so don't stress if this starts to pull back to that level. Below this level, stress, but as it pulls back to that level, that's just what markets do. They don't rise in straight lines, they rise in a series of rising bottoms. Games Workshop, folks, that was a beautiful entry down here. I'll put on the DEW signal. Beautiful entry down here, but this trend is starting to creep here. In other words, this bottom impinged that top, and these bottoms are impinging that top, so have to be careful here. If the general market were to pull back, then we would certainly see a pull back to the 70 level in this share. I think it's a great stock. Nevertheless, any weakness in the general market, and I think you'll see selling in that, and you need to make your mind up as to what you're doing. This Lion Trust, it has pulled back, and there's a line in the sand in Lion Trust around the £13 level. I see there was a major recommendation in one of the daily newspapers yesterday, the Times, to sell it. The analyst there feels that it's gone too far too fast. Maybe that's what caused that market to come back yesterday. Nevertheless, folks, I'm still holding it. It is illiquid, and if you're holding it in reasonable size, you really struggle to get out of it. I struggled to spend a whole morning trying to get out of it in February, just across here, and I got a heads up from one of our members up in Manchester who was doing a similar thing, and at the user group he told us that it took him a long time to in fact exit this position. So if you're holding a big position in Lion Trust Asset Management, you need to be very careful about that. If the general market hangs in there, I would suspect it's going to find support around at these lows again, and it's had once, twice, three times. If it finds support here and breaks up again, then it should break on the fourth attempt. Nevertheless, it's in my humble opinion, the trend in both the UK and the US market is mature, and as I've said 1,000 times, we just need to be careful. JD Sports is trending up the page, pulled back a little bit of news in the paper. Certainly the lie and the sand to watch would be below the £6 level. All right. Diploma looks fine to me. Halma is a great stock. It probably should be locked away. It's already broken and tested the February highs. BHM Macro is not doing well for me at all, and I bought into it late, and that's the only position in the UK that I've got that's underwater. GB Group looks fine. And Cranswick is doing what Cranswick always does. It sits and does nothing and then moves very fast indeed. Again, a stock that should be locked away. Howden Joinery pulling back, support around these levels. Not great at all. And the last one that I only bought a few days ago is Avast. And Avast seems to have cleared these highs, folks, and it looks to me as if there's a fairly strong target in Avast, well up around, I think I worked it out last week, at about £8. VectorVest does not advocate buying stocks at this time. That's really good advice. So let's just sit in the UK certainly and chill until this little pointer moves back into this green part of the traffic light. And the advice says VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So let's watch our positions very carefully. I do not like the look of this market timing chart one little bit, folks. I do not believe that this time will be different, and I do believe that sooner or later we're going to pull back here, and depending on the severity of this darn virus, I think that we'll probably pull back towards 62 or 78% of that level. It would take a strong deterioration in the pandemic, I think, for the market to take out these February lows. Okay, so just be careful, just watch your stops. If you do see a DEW signal, sell signal, then bring your stops very, very close to the market indeed. I'll be back on Monday afternoon at 1:30, and we'll discuss the situation in a great deal of detail. Have a great trading day, Friday the 10th of July, and those of you that listen to this, I'll be online at the Mellow Show all day tomorrow, so if you go to the show, just click on our link and come and say hello. You'll come straight through to my little study. Thank you very much. Bye bye.